was Roku there. All right, we're going to get into it here, waiting on Roku to report. Can everybody hear me okay? Should receive it. Roku's popping up here towards the highs. Waiting on official earnings to come out. Come on, Roku. Let's go. Come on. I hope so too. We're spiking up here already. 140.18. Nothing official just yet. Waiting on something right here. We don't have anything out just yet. Keep refreshing. Nothing yet. Just waiting. We are getting a little pop here. A lot of people anticipate it's one of the biggest earnings reports of the season right here. Come on, Roku. 141. Watch over 150 here if we when we get good news. Come on. Waiting here on the after hours reports. Uh-oh. Dropping 136. 136 now. Oh man, we just tapped 130. I'm waiting on official news. I don't know if it's out, people are dropping it or what. I'm just waiting on it. Let's go. Come on. There'll be a little bit of buffering here. All right. It's kind of all over the place right now. I'll have to end it. Roku's trying to decide what it wants to do. Come on, Roku, get up there. Let's figure out what you want to do here. Let's do this. Cool, man. Appreciate it, Vin. Thanks, everybody, for stopping by. We're awaiting Roku's official announcements on their earnings. We also have TTD, stamps.com. Quite a few others are going right now. Let's see what's happening here. All right, there we go. Come on. All right. Oh, this is just taking you to the website, which I already had up, but let's pull it up here. All right. Let's look at the results. First quarter results. Well, we know the conference call comes out at 5. I want to see the actual numbers. That's what I want to see. Where are they? Stock's dropping here 131. 112 if it keeps going on the downside. But I mean, it's not really like doing some huge drop. Okay, yeah, it did close up near 140. I mean, we are down about 8 points right now, sitting right on the daily 200 moving average. We're still waiting here. Come on. Indels. I want to see something. They don't even have it out yet. It says released it, but then I don't. They're not on their website yet. Let's look at Dropbox a minute. Dropbox moving up into the upside on their earnings. Let's look at TTD. That's swinging all over the place. 330 down to 312. Now 321 back to Roku. So I like this look here on Roku as far as, okay, it keeps testing the lows and bouncing back up. So, you know, I'm looking for it to move up. I'm bullish on it right now. So I'll see this turns around. I'll be bearish tomorrow, but we'll see what happens. Why were you long, Martin? Need to grab a quick smoke? Stressed? All right, what else we got? Let's see at stamps.com where they're at. All right, shareholder letter. All right, let's take a look at the Roku shareholder letter here. And I'll make it big so people can see it. I just want to see the highlights here. All right, this looks like acceleration of growth in new accounts and viewership continued in April. Active accounts grew 38% versus last year, driven by an increase in streaming hours per account of 30%. That's very good. And then year-over-year increase in new accounts of more than 70%. Streaming hours rose by 80%. For example, Nielsen data shows primetime linear viewing among adults 18 to 34, March 16th to April 19th was down 18% year-over-year, and then half of TV viewing by this important demographic was streamed. So what they're saying is obviously a lot of people aren't viewing on regular TV, they're going to Roku and other streaming devices. Of course, we know the pandemic's affected them. They ended quarter one with $590 million in cash. And equivalents, here we go. Quarter one 2020 highlights. Total net revenue grew 55% year over year to $321 million. $321 million. I mean, that's a huge increase over last year. Revenue grew 55%, and the stock's still kind of hanging down right here. All right. Platform revenue increased 73% to $233 million. Gross profit up 40% to $141 million. We added 2.9 million active accounts to reach 39.8 million. Streaming hours increased by 1.6 billion hours over last quarter to a record 13.2 billion streaming hours. Platform experienced positive negative results arising from COVID-19. Video ad campaign cancellations, delayed starts. Stock still heading downward here. Ad business made excellent operational progress following our data XU acquisition last November. All right, home together, account acquisition. So here we go. While our advertising business faces near-term challenges because of COVID-19, everybody's facing this same thing. Our content distribution business, as well as overall customer and consumer engagement, have benefited from a surge in OTT usage. No assurance these patterns will continue. Yes, we know you can't guarantee anything, but they represent an acceleration of the long-term trends reshaping the industry we already established prior to COVID-19. That's very, very good news there. Conclusion, while we hope for a speedy end of the COVID pandemic, it is likely that effects will be with us for some time. So uncertainty stream decade began differently than one can imagine. We're confident fundamental shift stream will continue, perhaps even faster than expected. All right, and the conference call. We'll have to get more details here on the conference call at 5 o'clock. So we got another 50 minutes on that. But let's go back to the highlights here. All right, this is what I'm looking at. Net revenue up 55% year over year. Platform revenue up 73%. Gross profit 40%. We added 2.9 million active accounts. Streaming hours increased by 1.6 billion. Average revenue per user of $24.35, up 28% year over year. I mean, you can look here at these numbers. Just look at the active account numbers that they're growing. I mean, revenue. Obviously, they might have wanted a bigger profit here. Yeah, this thing's. I mean, I'm not saying it's tanking. It's down $10. It's not like it just dropped to $100 all of a sudden. But there's something else that people are selling this. So this could be, ahead of the news here, to buy the rumor, sell the news event. But, you know, I've seen a lot of earnings here lately, and a lot of them have turned back around during the conference call. So I'm not sure what to make. It's not some big sell-off. Yeah, it's down $10, but, you know, it's a $140 stock. So, but still, that's, what, about 8%, 7%? How much is that down after hours? Yeah, about 5% after hours. I mean, not some huge drop. All right, TTD. Let's go over and take a look at that one. TTD, where are you at? TTD. That sold off. Stamps.com. I wanted some options on that, but they were so expensive. Nothing yet on those. Let's look at we got anything on Uber yet? CWH. OLED. Oops, typed over top of that, sorry. They're the iPhone glass maker. Of course, they haven't been making as many iPhones, not selling as many, so they're down here on their numbers. Let's take a quick look. Hey, appreciate that, straight balling, man. Yeah, okay, so this is a big thing here. Withdrawals previously provided 2020 revenue guidance due to pandemic. A lot of people are doing this, so in other words, they're not giving you any guidance for the rest of the year because they don't know what's going to happen. Obviously, it's out the window compared to what they were saying in January and early February. So this is for OLED revenue, 112 million versus 87. Very good. Sales, 66 million. Revenue from material sales versus 54. Royalty and license fees, 43 compared to 30. Looks like a nice beat here across the board. I mean, look at the numbers versus last year. 66 versus 54, 43 versus 30, 26. Okay, down a little bit there on the contract research services, not much. Total revenue, 112 versus 87. Of course, that's in, you know, thousands, which represents millions of dollars, but I'm just speaking the simple numbers. So that's OLED. I want to try to see if we got anything back on Uber. All right, just chopping around it. You know, Uber's having a bad quarter. Nobody's taking any Uber or Lyft rides right now. All right, here's a little bounce on Roku. Finally, some sort of bounce. Let's put this on the 1 minute chart. Yeah, probably be, let's see, short-lived. But obviously somebody didn't like some things in their report. I thought it was pretty decent myself. I mean, what did you guys think of it? What we went over there on the Roku report? Did kept anticipation of earnings. I mean, this is the earnings here. You know, and another thing is it has run up so much since the lows. I mean, it was down at $60 and we're up at 137. So about 25%, 130% run since the lows in March. So it might be baked in. That's another thing. In other words, yeah, they did good, but not as good as what the market was expecting given the recent run in the stock. But, like I said, it's not some huge sell-off. It didn't just boom, it just dropped 40 points to 100 or something like that. But I was expecting a bigger run given those, after I read the numbers there. I mean, for a long-term play, in my opinion, I mean, no financial advice here, but, I like Roku for the long term. So let's go take a look at Netflix. So obviously Netflix is probably going to be down if Roku's down on this. Let's take a look at what Netflix is doing. Okay, it's down, same thing as well. Yeah, it's still heading south. Right, look at a few other earnings. MSI, Motorola. If this rate says it's down, holy moly, this is not one I was necessarily paying attention to, but this doesn't look good here. Issued some press release. MSI 136 down to 122. Ouch, down here back to the lows of the back in March. Let's see, anything recent? Anybody see anything on MSI Motorola Solutions? I don't see anything right off the bat. It doesn't, is it earnings? But it would be up here. This thing's continuing to go. Just dropped. It's at 122. Now this thing has dropped to 115. Good night, man. 120. Let's pull up the daily chart. Let's look at our levels. 115. So next stop here after hours will be 110. If that breaks, then we're down here at 100. I mean, there's some price action here in the 105 area, but this thing's really, really selling off. If anybody's long MSI, I feel bad for you, man. I appreciate everybody stopping by. If you enjoyed the video, please give it a thumbs up, and don't forget to subscribe and be alerted when I upload new content, guys. I'm trying to do this more frequently. I did Apple last week, and did a live stream earlier this afternoon on we live traded some stocks, had some good plays on Twilio, Zoom, Fortinet, and Roku. So we're getting some sort of bounce here on Roku, but nothing sustained. Yeah, 127. Let's see. Yeah, I would say yeah, you could see if it breaks that 127 area, I could see going back to 120. But the key level, if this sell-off continues into tomorrow, would be below the 115 area, and that's going to take you back to 100. So definitely want to keep a close eye on that one. I have upside calls, and I do on the stock. I do have a good price on the. I have an average around $100, 102, I think. So I'm not necessarily worried about this. I'm not going to be selling tomorrow unless it goes all the way to 100. Then I'd probably bail and wait for a lower price entry down in the 80s or something. OLED. Herbalife, Bill Ackman. We all know about them, or most people have heard about that. This thing just got a huge pop. Herbalife Nutrition reports large volume point quarter in company history, largest volume point quarter. So they sell those supplements and whatnot. First quarter volume points, 1.6 billion increase, 5.6 compared to 2019. China volume 29%. I don't know what they mean by volume points. I don't know how many products, individual products that each rep sells. I mean, it's kind of a, different kind of multi-level marketing, different kind of company. Anyway, so they're getting a little pop there after hours. Cuervo, Jose Cuervo, you are a friend of mine. Boom, look at that, all the way up to 108. 110 would be the target here on this after hours, and then tomorrow into 120. Yeah, Roku around 130. It is kind of holding that area, isn't it, Martin? Yeah, I think some of this move was baked in. That's why it sold off, in my opinion. That's what I think. Let's go over to the trade desk. They do online advertising. Obviously, that business has been decimated here with the coronavirus. Where's stamps.com at? Oh boy, this thing can move. If you were short or had downside puts on this, you're probably feeling pretty good right now. So it's already down at 177. This thing, they had lost their government contract a few years ago. We had talked about it earlier today. The stock dropped from like 280 all the way down to like 20 bucks or something, 25 bucks, and then it's rebounded over the last year from 25 all the way up here towards 200. So not seeing anything in particular on the earnings yet on it, but obviously something came out. It's not showing up here. We're on the feed. All right, LED turning around. Come on, Roku. This looks like it wants to go lower here. Yeah, below 125 there. I think it's, 129, 128 area like he was saying. It's going to continue selling here this afternoon, in my opinion. All right, let's look at what else we got moving over here. What you see on the left-hand side of the screen are my trade idea scanners. There's a link in the description. It's where I get all my trade ideas throughout the day for intraday trading, swing trading, and investing. They also have crypto and built-in AIs that can auto trade for you and alert when certain stocks are making certain moves. There's all kinds of customization features built in. Again, it's just my after-hours scan. Literally hundreds of them. So there's a link in the description if you want to check them out. NTUSAAOI. Oh, that's the optoelectronics. That's right. They're selling off. I like trading that one. Revenue 40 million compared to 52, 48 in the fourth quarter. 29 revenue 3.8 million lower than expected due to COVID. So everybody's earnings report is going to have this. This line is it due to unanticipated COVID-related delays. But when you're reporting for the first quarter, we know COVID happened. We know the coronavirus. That we're in May, you're reporting for January, February, and March. So for 2/3 of the first quarter, February and March, we had this whole virus issue. So it was unanticipated until like mid to late January. And now you shouldn't be saying unanticipated, but anyway, that's just my take on the wording part of it. Joe Gamer, what's going on, man? Where you been? Been hiding out, dude. Thanks for stopping by, man. We're just going over Roku, looking at some other earnings. Roku here sold off after hours about 10 points. And going lower. So there went my calls for tomorrow. I had the 150s for tomorrow. I sold them and made a nice profit. And then went out a week to next week and got the 150s. So, yeah, not looking too good right now for those. Oh, that's cool, man. Whose Discord you been in? I don't do that anymore really much, man. I got so much going on. Net. Oh, that's the Cloudflare. StockTwits actually uses them. NET. Says they're down $2.42 after hours here. Shit, all the way down to 27. Let's see what they look like. Looks like a net loss. Oh boy. GoPro. That's right. They reported after hours. They're up 24 cents. Whoop-de-doo. I mean, I have their cameras. They're great cameras. I don't have anything against them, but their stock sucks. But hey, you're getting a little 50-cent pop here. Wolf money. I don't know who that is. But good, man. Yeah. Hadn't heard from you in a while, man. I'm glad you stopped by. Come by, subscribe, and stop by more often, man. So we got Cuervo, ESBK. That Herbalife making another move to the upside. All right, so we went up tap 44, and now we pulled back. Yeah, it was a 42 when we looked. Yeah, man. Appreciate that. For sure, man. Thank you. Yeah, I've been doing a lot more here, live streaming and doing some analysis and trading. Well, been doing trading, but I mean, here it's difficult sometimes, like in the early mornings when you're trying to trade size and get in and out positions and concentrate and all that. So I usually don't do much during that particular time. Roku, here we are, 127. There it is, Martin. Oh boy. Anybody who else is long Roku? I am. STMP continuing. We're straight balling. He's still in here. I don't know if you knew him or not. POR, ABLR. Just looking, there's Tuscina. Oh, that's Nautilus Medical, not the Nautilus, the manufacturer of weight equipment. Oh, cool. Yeah, I thought you might, man. Yeah, awesome. Martin, did you see? We just went down, man. That 127 area here on Roku. We're about to test it here. We're right here, like 127, 28-ish. Oh, so, hey, thanks, Joel, for subscribing. I appreciate it. Let's look over here. Yeah, 127. So again, right here, if you're looking at the daily chart on Roku, so for tomorrow, and on the, let me make this chart bigger here for you. Yeah, I know, Joel. That's what I was just, we have been talking about. I hadn't dug into TTD's earnings yet, but I had a feeling their advertising business was going to be down, but you're saying they reported good results. Roku looks like great numbers and good beats. Revenues up over 50%. Subscribers are up. Viewing hours are way up. I was telling the folks in here a little while ago, I just think that the price has been baked into Roku here from, back here at $60 during the lows of March when the market bottomed there. And we'd run up, 100 and whatever percent that is, 125%. And I just think that some of this was baked in. So you can see here on the chart on this green dotted line around the 113 area, and that's not exact, but you can see kind of the action in the disconnect when it comes around this area here. We came back up, went back above it, came back down, not quite touched it. Then we broke back below here. We made a low. Obviously, that's the market low. But stocks are like people. They have their own personalities and they trade a certain way. And Roku, you can see, is kind of, even before this whole, this is February during the coronavirus, but it's kind of been all over the place, right? except, and let's just forget about this market low during the coronavirus. You can't forget about it, but you know what I mean? This drop here. So if you take that drop out there and you just go back to 3 weeks ago, mid-April, we're still been in this range here from 117 up here to the 150 area. So again, 115, 117 will be a key level to hold tomorrow. If that thing breaks 117, 115 area tomorrow, again, watch out. We're heading down to the low 100s. If not, if this thing wants to recover, I was going to have to come back up and break and hold 130, but it's not looking too good right here at the moment. Yeah, I just think it's baked in. I mean, you can go back and look at the video later after it's published, but I had up the whole report and I can bring it back up for a second here. It's no big deal while you're here. Oop, that's over there. Sorry, wrong one. Where is it? I had it up. What happened to you? Nope, not that. And there we go. So, right, where's their highlights? All right, right there you go. Net revenue 55%, platform revenue 73%, gross profit 40%, 2.9 million subscribers added, 39.8 million total. Streaming hours increased by 1.6 billion hours to a record 13.2 billion streaming hours. Average revenue per user $24.35. You look at the platform, the gross margin percentage, the player gross margin. So as you can see, if you look here, this is going the quarter 119. So the player gross margin, what they make off of selling the actual Roku itself, is very little, right? 9.8%. That was a year ago. Now they're making a little bit more on it, probably because they've increased the prices, 11.9%. But the platform a year ago, 69.9, 70%. And now they're only making 56.2% gross margin, or a decrease of 1,374 basis points, which tells me, because they were at 70% gross margin, now they're at 56, that because of their ramped up expenses from sharing that revenue with all the participating third-party providers on their site. So, when you go to Roku, I've had one for like 6 or 7 years since they first came out. Maybe not right when they first came out, but 6 or 7 years I've had one. And it used to be you could add like any third-party, like a viewing site, shows, movies. They had different names, popcorn, and they were all free, no commercials. Then they started putting commercials in on some of these. And then they started charging to not watch them with commercials, and then charging for sites with commercials. So what I'm saying is, because of this decrease, that could be a reason there that they are sharing more money with more providers, and that's the reason for the 14% decrease, 13.7 to be exact, in the gross margins. Obviously, you look at research and development cost here, 88.3 versus a year ago, 55. I mean, they're really spending tons of money on the research and development to bring this technology and make it much better. So I mean, you look at Amazon. Amazon wasn't profitable until a few years ago, and their stock just kept on going and going for 20 years, and it still is. So operating expenses 196.3 versus a year ago 111. So all this costs money to do, to bring all this technology, update it, and all, et cetera, et cetera. So they still had a net loss here, right? This was a year ago 10.7. Right now, a net loss of 55.2, and that's in millions there. So adjusted EBITDA, they were a positive 10 a year ago. Now they're at negative 16.3. So the adjusted margin percentage went from 4.8 to negative 5.1. So all of that factored in. And again, they know, the market knows, and investors, institutions know that they're losing money as they ramp up production and and accelerating the service. However, again, I just think the stock has run up so much ahead of the earnings that some of this was baked in. And I think due to some of those numbers, I believe the market will take it down further. But again, we'll see what happens in the morning. So I hope that answers your question. And that's my analysis on it. What are your guys' thoughts? Well, straight bone, I'm just now reading back the chat. I was reading that. I had calls on Roku. 150 calls for next week, sold the ones today. So they're not looking good as of right now, but we'll see what happens in the morning. If you had puts, 140 puts, 130 puts, whatever, they're looking good at the moment. But again, you can't trade options till in the morning, only during market hours. But again, over the long haul, I think Roku is going to be fine. Yeah, and that's another thing, market share. That's where it's all at. You can get Netflix on their platform, but they're trying to be, they're the on-ramp, if you will, the one on-ramp that gets you on the highway, right? You buy a Roku, you can get Netflix on your Roku, you can get Disney Plus, maybe not Disney Plus, but, all kinds of different streaming services, ESPN, popcorn, old comedy movies, old time 1920s movies, etc. So they're the on-ramp that gets you on the highway. Otherwise, then you have to go to all these different sites on your TV, etc. And they have Roku TV, so they're a great kind of first gateway to get on the viewing superhighway. Yeah, I think Roku is going to be good long term. Yeah, and they are good, Sean. From what I see, I just spoke to the reasons why I thought they kind of weren't up as well as they should be. So it's going to be interesting to listen to the conference call, and that starts here in about 20 minutes. So we're going to listen to that and see what they have to say. All right, so Roku's volume's down out here on it. It's holding around there. Let's pull up TTD. Let's go back to Roku. I'm going to look at a couple others. So we're hanging around here, 127, 128 area. So we'll keep an eye on that. GoPro continuing to push up higher up, 13%. So 393 is a 200. Would you look at that? I say it all the time. What was the high right here on that candle? 393. You think I know what I'm talking about? That 200 SMA is very well respected. From a fundamental standpoint, it's a technical indicator, but even fundamental traders watch that 200 SMA. It's no coincidence if you look here on GoPro, right? They just reported earnings, stocks up, 50, 60 cents here. That it went right up into that 200. Again, top charts 5-minute, bottom charts the daily, right up to that 393 and pulled back. So that's not to say it can't go above that, but for right now, it's acting as resistance. And we're going to have to get a strong push. And, usually this thing doesn't make, big moves on earnings. It's kind of a steady Eddie stock, meaning that there's so many competitors out there, right? Yeah, they make a great camera, but there's other competitors who their camera quality might not be just as great as GoPro's, but it's very, very close. And, for half the price or a third of the price, 2/3 of the price, you know what I mean? So anyway, but I wanted to just speak to that 200 SMA. So if you notice the hashtag there, if you click 200 SMA, and now I may get some knockoffs, but that's why I put it in all my videos, because when I'm trading and looking at stocks, it comes into play every day, all day. All right. Camping World, did they report? CWH, that's Marcus Lemonis, the guy that has the profit on CNBC. He owns that company. Yep. So I guess people were buying campers in the first quarter. Who knew? All right. 1250. So I'll be looking at 14. I might take some of this here. I'm going to just look at the report here real quick. Oh, this is just, I got to go to a different site here. This is CWH Camping World. CWH. Appreciate y'all, you guys stopping by. All right, Vinny, thanks for stopping by, man. CWH, let's look. I just want to look at the report. I don't want to miss the move here, but we're up $1.60. I don't want to chase it neither, but I like this for a possible move to 14. They beats by EPS by 12 cents and beats on revenue. All right. Fourth quarter, that's the holdings highlights. So not seeing nothing specific. Anybody seeing a link for Camping World? I'll have to go and earnings. All right, so that was for the last quarter. Let me go look over here. All right. So they're saying this news filter bot here beat by 12 cents and beats on revenue. So there's the reason for the pop. I don't know. Part of me wants to take a small position here for a possible run to 14 tomorrow. I just wasn't expecting this big run on earnings. You know, one thing a lot of people will be buying campers and whatnot in the middle of winter, and then with the coronavirus in February and March. Who knew? Roku coming back around a bit. I'd like to see it just turn around and go up 30 points. Oh, yeah, nice little rebound here. Maybe people finally read into all the numbers like we did, and you know what? Saying, hey, it's not that bad. But remember, it's very low liquidity after hours on Roku, or on any stock for that matter. All right, SunPower, Power Tech. So some of you guys may not know this. SunPower looks good there. What's at 9? We'll go up to 813, 916. Another dollar room there. This stock here, it's over here on the left, par. Yeah, that AI it's hopping all over the place, then, isn't it? So they just reported, excuse me, PAR. All right, let's look at PAR. I'm just reading the highlights here real quick. All right. So they had a decent report. You can read it. I'm not going to read all the way through it, but if you guys don't know, PAR, you guys ever watch Bar Rescue? You guys ever watch Bar Rescue? I looked at it, Mama. I'll pull it up here in a minute. Anyway, PAR is Partender, the point of sale system for bars and restaurants that John Tabner hooks up these bars when he redoes their bars and everything. So they're a publicly traded company, in case you didn't know that. So again, restaurant and retail obviously has been decimated by the coronavirus. However, evidently had a pretty decent quarter. I just posted the link in chat there. Stamps is at 5:30, I believe. Here, the earnings call, I believe. So let's pull up Net Cloudflare and see what's going on there. And let's take a look at Net. Come on. So Roku back down. That was short-lived. Oh, Net not too good here. So this guy says 57% year-over-year growth. Guided for sequential growth next quarter. Took advantage and after hours. Cloudflare co-founder and CEO is a new billionaire. All right, that's just a small print there. Yeah, on the stamps, and I'll have to type it in just like you to confirm. See when they're all right. Stamps.com. All right, there's your 5 o'clock is Stamps.com. All right, and we're going to be listing the Roku one, but here's the link. You're welcome to check it out there for Stamp. Bitcoin's having a monster run here. We were trading and looking at GBTC earlier today. The Grayscale Bitcoin Trust. Look at the nice run it's had since the lows here, from $5 up to $12. So, excuse me, 130% or so. We have room up here to the 1360s. Bitcoin is, let's see, look on Poloniex. That's what I like looking. See where Bitcoin's at. The troll box. Let's pull it up. I think we're approaching almost back up to 10,000. 97.75 right now. Right on the internet there, Eric. Right at your fingertips. I just type it in. You go right to their website, and there's a earnings broadcast at 5. So, yeah, 97.75 here. I still own Bitcoin, but at a much higher level. Not I don't want to say I sold some and bought some, and then I rebought, and so anyway, I'm just letting it ride. But yeah, it's definitely done pretty well here. I haven't been on Poloniex in a while, but I just kind of look at the price of Bitcoin day to day. I don't get too much in depth with it, but it looks like it's making a come around, a turnaround, and I believe, what is it, Monday is the halving? Is that correct? For whoever asked about the Bitcoin, is that right? Aren't they doing a halving on Monday? Yeah, I believe so. Anyway, Bitcoin 97.81. So if you want to trade it in the market, the way I like trading it is a GBTC. RIDE blockchain. Again, the RIDE's kind of tough. Obviously, it's making a big move after hours here. I grabbed some $2 calls on it earlier. It was at the lows down here at 50 cents. Yeah, 50 cents here last month. We just popped above the 200-day moving average of 147, and now after hours we just tested 180. The Roku is the earnings call. Empower. So the CEO and the CFO of the company discuss the first quarter results, their numbers, what they're thinking moving forward, what they see, kind of a summary of what happened this last 3 months with the company and how they see the company growing moving forward. So that's basically what an earnings call is for, no matter what company it is. Yeah. So yeah, stick around, man. It's going to be on in about 9 minutes. I'm going to put it on. Here, that's Turtle Beach. That's the headphone company. I figured everybody, big run 4 to 12. Everybody, buying headphones. You need, everybody's buying computers and laptops and stuff since everybody's been stuck at home for the last 2 months, 3 months. But their stock's down after hours on earnings. There's HLF here. Well, it's down 15%, isn't it? Yeah, they're apparently didn't like the ad revenue exactly, but there are other metrics that we looked at, and I've done pulled it up and have it twice, but you can go back and take a look at it. Look really good, but I just think some of it was baked in the stock price, and that's why you're seeing this reaction. So yeah, I'm gonna pull up Twillo. What a run that had today. They reported earnings last night. Just real, that's not topic for this stream, but I just want to pull up. I'm in this one, 121, and this thing hit a high up here at about 177 or so. Just unbelievable run. Crazy. Then we had to pull back to 170. Just unbelievable. And I think it can go much higher. I mean, I'm looking down the road with all it's got going, and we see 200 here in the not too distant future, in my opinion. Again, just my opinion. No financial advice given nor implied. Let's go back to net. Their stamps continuing to fall. Net down 387,000 shares, 26. TTPH. ADTM, is that reporting? Martin, it makes no sense to me either, man. I have no idea. I have no clue. I mean, nobody's been taking Uber rides since, early February. And here it just keeps on going up. So, yeah, $2.9 billion. And, but I guess they're seeing a surge in food delivery, obviously. I have used them over the last few months, a time or two. I like doing when they have a free delivery or you share a driver and, a restaurant nearby and they go pick your order up and deliver it too. So, but yeah, it does get expensive. But they're discontinuing Uber Eats overseas, just the Uber Eats part. And I don't know what it was, Australia or somewhere, I think. And, there's a video from Patrick saying Bitcoin ready to explode. I was right. Told you so. Told you so. I hate when, I'm not saying the name, but what's this? And I said, but when people constantly are against you and then, you have to say something, I understand, whatever. I don't know. But, yeah, Bitcoin back up. We'll see. I mean, how many people here own Bitcoin? Anybody? Yeah. Stamps was pretty crazy. You got 30 grand in Bitcoin. Well, if you bought it at 17,000 or 20,000, that's only like 1.5 Bitcoin. But if you got it, obviously at a much, much, much lower price, then your 30 grand is probably doing, that's what it's worth, or that's how much you put in. Like, did you buy it when it was, $10, $50? Average price 9K. Nice. Oh, so you just got in, or you've had it like when it dropped and it went to 9K and then down to 4 and you've been holding this whole time? Oh, wow, man. That's awesome. Congrats, man. Don't forget to always pay yourself along the way, because you never know. So you sold around 6 and made 30. So now you still have 30 left on it. All right. Well, good. Nice job, man. Zillow. Redfin was reporting after hours, another real estate company. I don't know where it's going long term. It's just tough for me to decipher. We'll see. Use some money, move to Vegas to break into the cannabis industry. There you go. So you own any Tilray stock? CGC? They all popped the other day, and then I bought some Canopy the other day. But Canopy is I think the best one in my opinion, because STZ here, Constellation Brands, has a good stake in Canopy and are doing big things with it. So down the road, I believe it's gonna do well. Cool. So Vegas, yeah, they got the dispensaries. Just walk in. I mean, but there's one dispensary out there. We were out there a few years ago, and it's not my thing, but people I know were over there. A dispensary, you know where it is. It's close to the Treasure Island or whatever, and it's like the size of a Walmart. I mean, like a 150, 200,000 square foot place. I'm like, gee, Beniz, man, that's crazy. I'm sure you've been in that one, haven't you, Martin? Yeah, I don't know the name of it, that whatever it is, but it's like the size of a Walmart. All right, let's get ready here. We got Roku earnings call coming in a couple minutes. Charlotte's Web. Yeah. Oh man. Yeah, it's just getting uglier and uglier here. Look at Roku now, guys. 126, man. I want to hear this conference call. I want the CEOs and the CFO here to shed some light on this, man. We'll listen in here. All right. So we're just waiting for it to start. I know, yeah, Uber's just crazy after hours. I can't believe that big pop on Uber. I'll pause it here a minute while we're waiting, so you don't have to listen to that elevator music. Man. Oh, Trip. I forgot about Trip. I mean, I knew that was going to be down. Look at that. Just, it's the same with Booking. I mean, nobody's booking trips anywhere right now, right? Look at Booking. Actually, Booking turned around and made a little pop. They reported earnings as well. Huh. We're here on Roku. Come on, Roku. Give us something, man. We need something, Roku. $370, $23.60. They just have too much competition now, in my opinion. Dropbox, the online storage company. I mean, you got Google, you got Amazon's other storage companies. I just don't see how they're going to make it. They'll either, I won't say necessarily file bankruptcy, but they get bought out, I would imagine, or something. And their stock trades all over the place. It's just choppy. But you can see it's kind of the last couple of years just been trending down, although you got these crazy pops along the way. We just had two people leave me because of the music, but I'm waiting on Roku here. Come on. Yeah, well, I had it up because last time people said they couldn't hear the the call, so I turned it up real loud. So I can adjust it here once it starts playing. I just don't want to mess with it now until we actually get on the call. Zoom. Zoom ain't done nothing. Unless you're talking about that ZM is the real Zoom video. This Zoom, ZOOM, did they finally unhalt it? No, they and look, people still think that it's ZM, and that's the sad part. They must have actually delisted it, I reckon. Are you saying ZOM, the actual ZOM? Uh-oh, we got one. Any news? ZOM. Look at this, though. It's tough to trust this thing, man. Unless it's something significant. I mean, they just have these random pop and drops. I mean, I see it here, but, you know, I'd take a small position, nothing, not like 5,000 shares or nothing, like I normally would on a small stock like that. Oh, you got in at 22, so you got in this morning or something. All right. Yeah, man, making a little after hours run here. Jiva, yeah, is that one still around? Yeah, that thing's junk, man. All right, Roku, are we live yet or what? Come on, Roku, you said 5 o'clock, and it's 5:03. Come on now. I don't know why it's not in there. It should be illegal. Well, that's a nice little swing, though, man. Good job on that. Come on now, Roku. Are we going to do it or what? I don't want to play the over music, but I don't want to miss it. Daggone. Here we go. Now we're coming. Here we go. Can you
Good
guys hear?
afternoon and welcome to Roku's financial results call for the first quarter ended March 31st, 2020. I'm joined on the call today with Anthony Wood, Roku's founder and CEO, Steve Loudon, our CFO, and Scott Rosenberg, SVP and GM of our platform business, who will be available for Q&A. Full details of our results and additional management commentary are available in our shareholder letter, which can be found on the investor relations section of our website at ir.roku.com.
All right, good. Just making sure.
The following discussion, including responses to your questions, reflect management's views as of today, March 7th, 2020 only, and we do not undertake any obligation to update or revise this information. Some of the statements made on today's call are forward-looking and are based on our current expectations, forecasts, and assumptions, and involve risks and uncertainties. These statements include, but are not limited to, statements regarding the future performance of Roku, including expected financial results for the second quarter and full year 2020, the impact of the COVID-19 pandemic on our industry, business, and financial results, and the future growth in our business and our industry. Our actual results may differ materially from those discussed on this call for a variety of reasons. Please refer to today's shareholder letter and the company's periodic filings with the SEC for information about factors which could cause our actual results to differ materially from these forward-looking statements. You will find reconciliations of non-GAAP measures to the most comparable measures discussed today in our shareholder letter, which is posted on our investor relations website at ir.roku.com. I encourage you to periodically visit our website for important content. Finally, unless otherwise stated, all comparisons on this call will be against our results for the comparable period of 2019. Now, I'd like to hand the call over to Anthony.
All right,
Thank you for joining today's call. The COVID-19 pandemic has created a tremendous amount of pain, disruption, and uncertainty around the world. We recognize that the pandemic's effects on Roku's business is a top question for this earnings call, and so we have focused our shareholder letter on that topic. Let me summarize what I believe are the main impacts on Roku and streaming in general. The pandemic is accelerating the shift to streaming by both viewers and the industry. People are spending more time at home, and so TV viewing is increasing. Viewers are selecting streaming because of its excellent content and value. Increased unemployment and a likely recession are making value more important than ever. These factors have driven dramatic increases in our new account growth rate since the pandemic took hold.
Right. So why is the stock?
In the short term, the pandemic is slowing the growth of Roku's video advertising business. While advertisers are spending less, reduced budgets mean marketers are looking for ways to invest more effectively, and this should accelerate the shift to streaming ad buys. Our large content distribution business continues to perform well and has seen a surge in SVOD trials and increased TVOD activity. We believe that the pandemic is accelerating secular trends towards streaming and that these changes will be permanent. With that, I'll hand it over to Steve.
Well, it's short and sweet.
Thanks, Anthony.
Oh boy, Steve's pretty loud
In
here.
Q1 2020, we exceeded our outlook for revenue and adjusted EBITDA and continued to make significant operational and financial progress while also responding to the initial impacts of COVID-19. Before taking your questions, I'll walk through operational and financial highlights and discuss our approach to outlook given the current level of uncertainty. We added 2.9 million incremental active accounts in Q1, ending the quarter with 39.8 million active accounts, and subsequently passed the 40 million active account mark in April. Sales of player units continue to be robust, up 25% year over year, while average selling price decreased 7% year over year. Roku users streamed 13.2 billion hours in the quarter, an increase of 49% year over year. We completed the rollout of the Are You Still Watching feature in late January, which prompts users to confirm they are still watching after a period of inactivity. We estimate that the rollout of this feature had roughly a 7 to 8 percentage point negative impact on the year-over-year streaming hour growth rate in Q1, and we expect a slightly higher percentage point impact on year-over-year growth rates in subsequent quarters in 2020, given the rollout of this feature is now complete. Platform monetization continued to increase, with ARPU up to $24.35 on a trailing 12-month basis, up 28% year over year. Please see our shareholder letter for full financial details from the quarter, but I'll highlight a few items. Total Q1 revenue exceeded our outlook, increasing 55% year over year to $320.8 million, reflecting the fastest Q1 revenue growth rate in over 5 years. Platform segment revenue was up 73% year over year to $232.6 million and represented 73% of total revenue. Player revenue growth of 22% year over year again came in ahead of expectations, driven by strong player sales, especially in mid to late March as stay-at-home orders started to take effect.
Right.
Gross profit grew 40% year over year in Q1 to $141.1 million, resulting in a gross margin of 44%. Platform gross margin of 56% was somewhat lower than expected, due in part to COVID-19 related adverse
that's what I talked about earlier
on
when
video
the
ad
numbers.
sales and higher margin sponsorships and audience development spending, as well as a higher than anticipated mix of gross revenues from our DSP ad platform. Player gross margin of 12% was higher than expected due to less promotions, owing in part to tight inventory in some fast-selling products during the quarter due to COVID-19 related supply chain.
You can watch as he's speaking,
as well as lower
people that haven't reviewed the
Player
numbers
gross margins were higher despite increased air freight
are
costs
selling
as
it
we
down
sought
even
to
more right
rebuild
now.
inventory levels. We anticipate higher air freight costs in the short term. Q1 adjusted EBITDA of negative $16.3 million exceeded our outlook due to slower than expected OPEX growth, resulting from hiring slowing down in March. Q1 OPEX was $196 million, up 76% year over year. As a reminder, Q1 was the first full quarter including the impact of acquiring DataXu's operations and personnel. Q1 also includes approximately $3.4 million in intangible amortization related to the DataZoo acquisition, roughly 2/3 of which is included in platform COGS and 1/3 in sales and marketing OPEX. Roku ended Q1 with $590 million of cash, cash equivalents, restricted cash, and short-term investments. This includes a $70 million drawdown in March from our revolving credit facility, which we believe was a prudent move in light of current financial market conditions. Given the significant level of uncertainty caused by the COVID-19 pandemic, we previously withdrew our full year 2020 outlook and are not providing revised outlook ranges at this time. Instead, we would like to highlight some data points we are seeing so far in Q2, as well as provide some thoughts on how these short-term trends may manifest itself into longer-term shifts in the TV landscape. Acceleration in new accounts and viewership have continued in April. Active accounts grew roughly 38% year-over-year, driven by an increase in new accounts of more than 70% year-over-year.
I mean, that's fantastic.
Streaming hours grew approximately 80% year-over-year in April, driven by an increase in streaming hours per account of roughly 30%.
That's huge.
Platform monetization has seen a range of impacts since mid-March. We have seen an uptick in SVOD trials and subscriptions, as well as an increase in TVOD purchases, as studios have brought new releases concurrently to streaming.
I think this is going to be a short-lived dump
On the
here,
other
but
hand,
it could
our
continue
advertising
tomorrow.
business has seen cancellations as some marketing budgets have declined, but this has been partially offset by new marketing budgets moving to Roku from traditional TV, given cancellation of high-profile live sporting and entertainment events, as marketers follow viewers and increasingly seek targeted, measurable forms of advertising. Ad cancellation levels were most pronounced in late March and have since decreased in early to mid-April. We anticipate that our ad business will continue to grow substantially on a year-over-year basis, albeit at a slower pace and lower gross profit than we originally expected for the year. We believe the behavioral changes by TV ad buyers are likely positive for us in the longer term, and that with more time spent at home and many households curtailing spending in light of economic hardships, cord cutting and the shift to streaming will continue to accelerate. We remain committed to our strategic investment areas and to extending our competitive advantages. At the end of Q1, however, we took steps to slow the rate of growth of our operating expenses and capital expenditures, so progress may be slower. Depending on the impact of COVID-19, we are likely to run at an adjusted EBITDA loss for the full year of 2020.
So there you go. There's your guidance.
Operating expenses are headcount and facilities related.
That's the biggest thing I've heard on the call right there.
We will continue to monitor conditions and the trajectory.
Guidance at a loss for the rest of the fiscal year 2020.
While Q1 was another strong quarter, I am most impressed at how well our Roku employees have been adapting to the rapid and significant changes occurring in our industry and the world at large. Roku has always been a company of problem solvers who have a bias toward action. These characteristics will be immensely helpful as we all navigate the current uncertainty. With that, let's turn the call over for questions. Operator?
Okay, that's the end of the actual call. Now
Thank
the
you.
other
And
questions.
ladies and gentlemen, as a reminder, to ask a question, you need to press *1 on your telephone. To withdraw your question, just press the # key. One moment while we collect our roster.
*1. Everybody press *1. We're going to ask them. Come on, man.
And our first question is from Laura Martin with Needham.
Can you hear me okay?
Yep, we can hear you.
Great numbers.
Great.
A couple things. Cash from ops was almost all $46 million in the quarter, almost all offset by PP&E. Can you just remind us what the purchase of property and equipment was in the quarter? That's one for Steve. Then you say in both the letter and you just said it that you think your advertising is going to have lower gross margins.
Right.
And I couldn't figure out
Everybody
what's
is.
driving the margins lower. And then my third is I see that you're still continuing to sell 1 out of 3 TVs in the U.S. and 1 out of 4 in Canada, which is awesome.
Wow.
Does this help your negotiating leverage with like TCL and these other TVs who had been sort of trying to get you guys to rev share? Do they need you more now at post-COVID? Thank you so much.
Yeah, hey Laura, this is Steve. I'll take that first one. Yeah, the BPE, the expenditures on that are largely related to the headquarters build-out. We've been scheduled to complete the next phase of our build-out here in Q2, so that's largely related to that.
Okay.
Steve, you want to take Laura's second question?
Yeah, sure. Laura, on the second one, we actually said that relative to original expectations that the ad business would substantially grow, but be at lower expectations in terms
breaking down the lows here right now, breaking
gross profit. We actually said
125.
gross profit, not gross margin, which is related to
someone just sold 1,300 shares at 125.
Anticipated. We didn't give a directional call on the actual margin itself.
Gotcha. Okay. And then this is strong TVs, negotiating leverage with your TV makers?
Yeah, this is Anthony. Roku TVs, that program is doing really well. In general, we're seeing very strong demand for Roku products. New accounts are up over 70% in the last few weeks, which is tremendous growth. Both players and TVs are doing really strong. In general, the Roku TV program brings a lot of benefits to our partners, both retailers and OEMs. Everything from, strong consumer demand, low returns, great software. We manage the software updates. We help with bringing up factories. We do all the engineering. We do retail promotions. So, there's lots of benefits that it brings. And there's lots of reasons why OEMs love the program. And we think, there's still room. We have a share of over 1 in 3 smart TVs sold in the U.S. are Roku TVs these days, and I still think there's room to grow that.
Thanks for all the post-COVID read-throughs, Anthony. Super helpful to have your opinions on a lot of those big issues post-COVID. Thank you.
Thank you.
Thanks, Laura.
Thank you. Our next question is from Rob Shuckert with William Blair.
Good afternoon. Talked in the letter and the prepared remarks about budgets moving from linear to Roku. I'm sure you're not going to quantify how much moved over, but can you just give us a relative sense, the growth rate, either sequentially or year over year, that moved over, and then perhaps more importantly, perspective on the stickiness of these ad dollars post-COVID, particularly in anticipation of live sports eventually coming back at some point. And then just to follow up, a clarifying question for Steve. You talked about, obviously, through mid-March and late March that we've heard from all ad-supported models, cancellations, but I believe you talked about seeing decreased ad cancellations in April. Can you just maybe provide some more color? Are you starting to see your advertisers come back? And if so, some of the video advertising coming back, and any color you could add there would be great. Thank you.
Hey, Ralph, Scott here. Let me take that in parts. First, I'll just say that the overall ad marketplace is down, and Roku is not immune to that. That said, we are much better positioned than linear television. Just a couple stats. Primetime linear consumption is down 18% year over year from mid-March to late April. For adults under the age of 35, half of their TV time over the last month has been done on OTT and streaming instead of linear. Meanwhile, streaming in Roku is up 80% in April. So, right there in the microcosm, you can see a significant shift in consumer habits. What we're observing here and what we believe is happening is that major disruptions are going to accelerate the change that was already underway here between linear and OTT. A disruption of the order that we're seeing here, we believe, is going to force marketers to reassess their assumptions about how they invest in linear and to not overlook the caveats and the growing relative audience of OTT relative to linear. I think we'll see this disruption play out in the upfronts, for example. which are already being significantly disrupted. And the best analogy that I'd offer for what we think will play out here between linear and OTT is what happened to the print business in the early 2000s. Print had been ceding audience significantly to digital media 2000 through 2008, but it took the 2008-2009 recession to really reset the investment levels in print. It had been sustained through 2008, and coming out of that recession, the investment levels never really came back to the prior levels in print. I think that we'll see something similar to that play out with linear, where certainly linear television will remain a major medium. Spending will come back, but it's likely, in our view, not to come back in the way that it had been, and certainly, even in the case you mentioned sports, but even in the case of sports, we think that this disruption will force a reassessment broadly by marketers.
Great. And then just Steve, on the comments, or anybody wants to answer on anything that you saw coming back in terms of ad spend in April?
Oh, well, I'll take that question as well. We did see, sorry, I missed that part of your question. We did see an uptick in cancellations and a pipeline slowdown in mid-March. Since then, in April, we've seen it stabilize. We had a great Q1. Our monetized video ad impressions would have doubled, came close, but for COVID. And while the rest of the year is uncertain, we still expect substantial growth in the ad business through the year.
Great, thank you.
Yeah.
Thank you. Our next question is from Viv Israel with Bank of America.
All right.
Great, thank you for taking my question.
Analyst calls.
The first, another question on gross margins. Can you quantify how much of the impact is due to maybe mix shifts between video ads, premium subscription, content distribution versus the impact of just lower gross margins for the video ad business? And then how should we think about gross margins in Q2 and potentially after advertising budgets normalize?
Yeah, hey, it's Steve. What we said was in Q1 on the platform margin side, it was lower than anticipated. There were a couple of factors. One was COVID-related cancellations and weakness hit a combination of our advertising businesses, including the ad sales business, which generally operates around a 50+% growth margin.
I think that ad business will come
profile,
back
as well as higher margin
better here in the second and third quarters as we come out of this and more states reopen.
A headwind on
the
margin.
Back to business.
We also had greater than anticipated mix of gross revenue versus net revenue within the DataZoo DSP. So as a reminder, that does not impact gross profit dollars from the DSP, but rather, the revenue profile as well as the margin. So those were the biggest pieces. In terms of, you made a comment about the video ad sales margin being down. It actually was in line with expectations or slightly ahead of expectations for Q1. So that was not a contributing factor for Q1.
Okay, that's helpful. And then on active accounts, you've also seen pretty strong active account growth, and you're talking about even stronger, like the growth continuing in April. I'm just wondering, with active accounts at 40 million, I'm hearing that a view that it's approaching kind of saturation in the U.S. How far do you think you can keep on growing active accounts in the U.S.? And I know that you previously also talked about sharing some additional metrics on your international growth. Does COVID-19 kind of impact your decision there on sharing any additional information? Thanks.
This is Anthony. I'll take the growth potential in the U.S. I mean, there's a lot of room for Roku to grow both domestically and internationally. There's probably 1 billion households around the world that have broadband, and they're all going to switch to streaming. So, I mean, if you just look at the recent numbers,
Mm-hmm.
I mean, definitely being
And that's
accelerated by
good for
COVID, but
Roku and
over
Netflix.
70% new
Obviously,
account
Roku is dragging
growth
Netflix
year over
down
year
as well.
is very strong. So
Not
I do
much.
think there's room to continue growing active accounts. I don't think we're at reached saturation.
No.
Yeah, hey, this is Steve. I'll take the second part. Yeah, we did mention that we thought at some point it would make sense to break out the international results or provide a little more color on that. But that likely was sometime in the future.
Short-term
We
bounce
remain
here.
committed to international as well as our other strategic investment areas, although the timing on such plans may get impacted depending on country-specific conditions as the COVID pandemic and the resulting economic issues roll forward. But as we said previously, that disclosure likely will not occur in the short term.
Okay, thank you.
Thank you. Our next question, apologize, Mark Gutowicz with Rosenblatt.
Thank you. Hey, Steve, thanks
Big
for the
institutional firm here,
gross
Rosenblatt
margin, and
Securities.
particularly the video margin sort of holding. That's very helpful. Maybe just a bit more detail on the gross profit side. You mentioned the DSP mix of revenue. Just trying to get a sense of, I know that's early, and I assume you're talking about the OneView ad launch. So maybe a specific question in terms of the mix you saw in Q1, sort of what your objectives are near term and long term with that OneView platform in terms of go to market, pricing, and how that may impact gross margin going forward in terms of, your gross profit going forward. And then just also on the TVOD S5, just curious, again, the mix there, you mentioned in the shareholder letter that stepped up in the quarter. Just trying to get a sense of, maybe how much of a step up that was and how much of that was Roku channel versus off Roku channel, given the margin differential there. Thanks.
Hey, Mark, this is Scott. Let me take the more strategic end of your question about the OneView launch, then I'll hand it to Steve for some commentary on the financial aspects. We did do a very substantial relaunch and rebrand of the DSP, the DataZoo capability that we bought in November. We've tightly integrated the capability into our ad stack. We've integrated our first-party identity info, our data, targeting data, ACR, our Roku media and measurement capabilities. It's a big milestone for us as a company and realization of many of the goals that we set out to achieve when we acquired DataZoo. It's going to allow advertisers to reach 4 out of 5 U.S. households across Roku media, other OTT platforms, desktop and mobile, and it's equipped with fundamental capabilities that we think strongly differentiate it relative to other DSPs, namely that identity and data info that we have as an at-scale platform with a first-party consumer relationship. And that data equips us to help advertisers reach more users, reach more inventory, do better measurement and optimization. And so specifically, in answer to your question, our goal with that product is really to expand the set of business we do with advertisers to not just sell them media, but sell them a platform that helps them invest in OTT and all media more effectively. We're very excited about the progress we've made on that platform. Steve, do you want to take the follow-up questions from Mark?
Yeah, sure. Thanks, Scott. Hey, Mark. Yeah, just on platform margins in general, if you think about the different pieces, you have the video ad business, which traditionally is run at a 50+% margins, sponsorships and audience development, as I mentioned, higher margins. And then the other side of the equation is the content distribution pieces of platform. That's the subscription rev shares and TVOD. Those run at very high margins. So certainly, it's a short-term trend. We'll see where it goes, but an uptick in SVOD trials and subscriptions as well as TVOD, will increase those high-margin segments. Those are for third-party apps. Within the Roku channel, the premium subscription basis is on a gross basis. And so that would be a different margin profile. You mentioned the sort of DSP platform. As Scott mentioned, with the one view, that's getting tightly integrated, and so we anticipate that kind of the gross to net will stay the same or potentially shift more to net treatment over time as it gets more integrated into the standard Roku advertising business. So we're not providing formal guidance on that, but those are some of the different pieces and
no guidance on that.
Excellent. Thanks,
I was
Scott.
hoping for something on that.
Sure.
Thank you. Our next question is from Michael Morris with Guggenheim.
Thank you, guys. Good afternoon. A couple for me. Can you talk about maybe what percentage of your advertiser base uses your targeting functionality and perhaps even your direct response functionality compared to maybe just more of a broader television buy? I'm also curious if you can talk about how you are approaching the upfront this year, given the kind of dislocation there. I know it's something that you've been more focused on. So how are you approaching that, and are you expecting to grow your mix there? And then just finally, you talked about audience development spend perhaps being negatively impacted by COVID. And I'm a little bit surprised just because of the demand for streaming. It seems like a great place to put advertising dollars to work. So I'm just curious if you were surprised as well, and maybe what you're seeing in terms of the trend there. Thanks.
Sure, Michael. Scott here. So first off, I'd say that our advertising clientele has diversified rapidly over the course of the business, and especially with the advent of a DSP offering and the ability to access advertising across a broad number of platforms with data and optimized to results. It is accelerating the breadth of clients we serve, as well as diversification into more performance or DR type advertisers, as you suggested. So historically, our business is very Fortune 500 heavy, but that's rapidly diversifying as we grow. And data and targeting, machine learning are essential ingredients to advertisers as they choose to move their TV budgets to OTT. And we have that in spades as a at-scale platform with deep first-party relationships. Your second question was about the upfronts. It is our view that the traditional TV upfronts will be significantly disrupted, are being disrupted. I mean, the live pitches would be going on now. Most TV networks have flipped that to a virtual presentation. Programming production is paused. A lot of fall programming will not be available. And many folks are talking about shifting the traditional TV upfront to a calendar year, which you can hear basically as a quarter shift out of the big investment decisions that brands typically make in the upfront. All of this, we think, spells uncertainty and ultimately a catalyst for marketers to reconsider what is traditionally a very heavy investment period for them. And we do think that the fundamentals of OTT will shine through as marketers reconsider their upfront investments, and ultimately money will move out of the upfront into scatter and especially into OTT as an alternative. So we plan to continue to, as we have for the last few years, participate in the upfront process and be aggressive there. And we think our offer is especially strong, and that the stats and the shift in consumer behavior during COVID speak to just how important it is for marketers to move money to reach consumers who are no longer reachable in linear television.
Thank
you. Anthony.
Yeah, go ahead.
Sorry, I was just going to jump in and say that I think one of the trends that the current pandemic and its impact to the economy is accelerating is the desire for free TV, which is an area that Roku leads in. So, products that we have like the Roku channel are super strategic to us and very important, and we think that their growth is going to probably improve above its already robust rate.
Thanks. Any thoughts on the audience development trend and given the greater streaming?
Yeah, I'll comment there. I would say audience development is part of our category of entertainment marketing, and we are seeing mixed effects right now broadly. But you are right that, and as we've highlighted in our shareholder letter, we are seeing a surge in subscription services, in free ad-supported services. That's especially clear in the premium subscriptions offering inside of the Roku channel, which has seen a significant growth in trials, especially as services have offered extended free trials. And so we do see our content partners leaning in to work with us to market their services, and in general see a fair bit of robustness in the content side of our business.
Thank you.
That's what I want to see there.
Thank you. Our next question is from Cheyenne Patel with Susquehanna.
Hi, this is Algo for Shaw. So I just wanted to ask, given the cancellation of sports budgets, can you talk about how you're seeing linear TV sports budgets move over to Roku or OTT in general, and what it could look like in the coming quarters?
Yep, we did see a lot of action. This is Scott here. Thanks for the question, Oliver. We did see a lot of quick movement by brands who realized that their heavy investments against sports needed to get reallocated. Moreover, some of these brands had messaging challenges. They might have had messaging or creative that weren't relevant or felt less relevant while people were sheltering at home. And so that actually drove a lot of interest in working with Roku to create new ways to reach consumers, especially as surging streamed. We launched within a week of shelter at home, kicking off something we called Home Together, which is an aggregation of free content, news, and free movies and TV shows. And we had brands like T-Mobile, TurboTax, Chase Marriott come in and sponsor that experience. And, it helped solve a problem for them, which is how to reach consumers during this phase. But it also helped us bring forward a bunch of awesome content for our consumers.
This is Anthony. I would just add that, a clear trend that we're seeing here is that the pandemic and all its various aspects are accelerating trends that we've already started before the pandemic, particularly the transition to streaming. So, things like lack of sports, a desire to save money, a move towards value, those kinds of trends are accelerating streaming and they're accelerating cord cutting. And sports will come back, but all those cord cutters are not going to re-sign up for their cable. So, I think a lot of these changes are going to be permanent.
Got it. And can you talk about how ad pricing trended in 1Q and how you expect it to trend in the coming quarters?
Well, OTT, in our view, remains a premium product and has historically commanded premium pricing. And we think, frankly, that's just a function of it being a more effective media. It performs well. It's got better data, better measurability, and with technology like OneView, the opportunity to optimize to down funnel results that marketers care about. So we're not certain how pricing, and how the overall market plays out over the next couple of quarters, but we are much more heavily focused on attracting TV ad dollars into OTT. That's our focus as a company, and we do see that there's an opportunity to accelerate that transition.
Okay, thank you.
Listen to one more question, then we'll talk here.
Our next question is from Jason Helfstein with Oppenheimer.
Thanks. 2 questions. So first, what will Roku advertisers be able to do through the data do assets that they could not do before? And then what can you offer, let's say, advertisers who historically were not Roku advertisers, and let's say they were price-sensitive advertisers. And the second question, any thoughts on when and if you might provide more detail on international active accounts and streaming hours so we can get a sense of your progress there? Thanks.
Yeah, Jason, I'll take the first part of your question. There are fundamental advantages behind the OneView platform. For example, in our recent relaunch, we anchored the device graph in our first-party identity info, and we synced our data into the system so that marketers can use that tool set to achieve better scale. When you've got more accurate identity info, you can more confidently reach a larger consumer base, and you can access more inventory. So that's a key advantage. And then the data and the identity is of higher quality, and so it will enable marketers to measure better and ultimately to optimize to results. For example, buying an ad on Roku and then optimizing it based on a site visit to the advertiser's website or the purchase of a product. So those are fundamental new capabilities for Roku to be able to offer, and they're differentiated from the marketplace because they're anchored in our at-scale first-party data. The other essential difference that I'll point out is by making this data available in our DSP, we're enabling marketers to use it not just when they're buying media from Roku, but when they're buying from publishers on Roku as well as media off Roku. And that is also a fundamental and new offer for us that we're very excited to take to market. I'm going to let Steve take your second question.
Yeah, hey, Jason, it's Steve. So in terms of international, I mean,
all right, I'm going to cut the call off there. It's, maybe they're going to talk about international, but we kind of got what we wanted to hear. Increased spending, decreased gross margins. Again, everything I talked about, analyzing the numbers before they even spoke. So kind of new, but I always like hearing from them and seeing what they have to say. What do you guys think? I mean, like I said, I think long term will be fine, but there's going to be some short term pain. This thing, we're down here at 122 now, 123.60. Again, if it breaks that 114 level tomorrow, we're in trouble. But, excuse me again, this thing could turn around and rip up to the upside. But it just so happened that the last earnings report in February, right before the COVID shit hit the fan, this thing, gapped down from 150 down to 128, so 22 points. We weren't quite at 150. We had hit about 138, 139, call it 140. We're down 17. So on a percentage basis, let's look. So approximately 15%. If we go here and we're down to 123, we're down 10%. So last ER, so down 15. This one we're down 10 so far, but that was the next day. You're only talking after hours. So, we still have the rest of after hours go tonight, another 2 hours and 15 minutes, and then tomorrow morning before the open. So we're going to see what happens. Definitely be in play tomorrow. Be careful. Always have a stop. Make sure never to risk any more than you're willing to lose. And don't forget, Roku, baby. Roku, I think will be fine long term. I'm looking forward to owning it for a while. Yeah, it was. Excuse me. Yeah, and so it was. The reaction was worse than I expected, but overall, the numbers and everything look good. I appreciate you guys being here, and the new guys, if you haven't already, click the like button and subscribe and be alerted to when I upload new content. I've been doing this a lot more here lately, doing earnings calls, live trading. So yeah, this Roku again below 114 would be a key level tomorrow. That's only another $8-9 away now. Yeah, the November earnings. Yeah, what did we turn around? Forgot what happened in November. I can't remember what happened yesterday. Sometimes you look at so many stocks. November. Yeah, what, a gap down after hours and then turn back around. Very possible. Anything's possible. So, yeah, I'll have to see what we'll do with the calls I have tomorrow. I still have a few weeks. I got one for next week and a couple the following week and another one for the week after that. Let me guess, Uber's still rocking up here. Crazy, man. Absolutely crazy. OLED. ALNY. TTD. Again, that's advertising, online advertising company there, the trade desk. So obviously that took a big beating here. That's down, what, 428 points already. Let's take a look at that. If you look at the run this thing had, I remember when it was down here, I thought I was going to short more. I did, and then I lost like 5 points on it. And then I never got back in to take the long side up. And literally that was at like 130 bucks. I kid you not. 135 was right around there. So we went from 130 all the way up to 323.30 basically. So obviously this one was due for a pullback. Well, guys, that's about it. Again, thank you everybody for stopping by. If you have any last minute questions, let me know. Don't forget to give me a thumbs up on the way out, and we'll look forward to seeing you the next time around. So I'll wait and see if anybody has any questions. Thanks, Martin and Inch and everybody for stopping by, Winter. And come on back, man. Let's see anybody. That it? Anything else I'm going to take a look at for tomorrow? Actually, real quick before I go, let's go over the ones for in the morning. I've already looked at some of them, but we'll go back over. Let's go here. All right. So tomorrow we got Cron, Bloomin' Brands, RD, Lear, X-Ray, TH, Cron. That's be interesting. NBL, Noble, Midstream, Oil Name, Lear. Not so much there. XSPA, that's the oh, I just saw it. X-Ray, that's it. Huh. Straight ball. I don't know, man. We'll see. I might pop in. Yeah, after this morning. That's a good laugh to go out on. I think on that one, dude. Yeah, I might pop in there. We'll see. Nobody wants to listen. That's all right though. You gonna be in? You might. I appreciate it, straight baller, man. That's funny. And I replied to you there from the one from earlier, man. Thanks a lot, man. Appreciate it. And if anybody's interested and wants to read more on the shareholder letter, I pinned it in the comments below. So thanks again, guys, and I'll catch y'all later on, man. See you next time. Make sure you hit the bell notification now when I upload new content and go live. See you guys later. Have a good night.